Zambia has seen a rise in the cost of living, with the dollar being at 22.68 against the kwacha and having an overall increase in the prices of goods and services. A debate has sparked sectors of society after the remarks made by Godfrey Mwamba, who claimed that Zambia's economy is doing better than most African countries.
Compare the prices. They will realize that President Edgar Lungu has actually contained this country to a level where at least things are still affordable. I was in South Africa a couple of days ago. A bag of meal now is going to, is fetching about the 380 kwacha. Cooking oil, almost 400 kwacha.
Yusuf Dodia, a financial analyst, has explained that it is not right to compare Zambia's economy to other countries.
It went up 2 years ago by 300%, and the impact of it is being felt now. We are looking at a situation where the exchange rate between the kwacha and the US dollar is going towards 23 kwacha to a dollar from somewhere like 10 or 11 kwacha to a dollar some 2 or 3 years ago. We are looking at a situation where 1 South African rand was being purchased for about 18 ngwe, 70 to 18 ngwe some 3 years ago, and today 1 South African rand is about 1 kwacha 20, 1 kwacha 30. In other words, the rand has remained strong, it's the kwacha which has deteriorated. We look at a situation where the inflation rate is edging towards 25%. Now, these are difficulties. And when we begin to see inflation rate running at about 25%, it means that the cost of doing business in Zambia automatically shoots up. How is that so? Well, firstly, the banks are not going to lend you money below the inflation rate. So in other words, the interest rate from a bank will be a minimum of 1 or 2% above inflation. Now, if inflation is at 25%, you expect bank interest rates to be at around 27%. But most banks will add more than that because they have to survive, which means you are looking at interest rates in the banks of 35 to 40%. Now that means the cost of money becomes very expensive. And Zambia is a net import dependent country. If you look at the products in the shops, 95% of the products in the shops are imported, meaning that our people have to buy that dollar at 24 kwacha, 25, 23 kwacha, and go and import products. And then when they import that product and they recognize that this product will be on their shelves for about 3 to 6 months before it sells, they have to add in inflation, meaning that where they were going to make 20 to 30% profit, they have to push it up to 50%, 70% in order to cater for inflation. That's how the consumer ends up paying so much more money for something which was quite cheap just a few years ago. So the inflation rate is hitting everything. It is making the cost of doing business go up. It is making transport expensive. It is making the cost of energy expensive. And at the end of the day, it makes all products expensive for the consumer.
Valerie Banda, Movie TV News, Lusaka.